So will we see stagflation in 2022? Well, let's take a look. I'm Rachel Jones and this is Kalkinemedia. Amid changing headwinds, the inflation forecast for Australia remains complicated. The country has now entered another year marked with uncertainty. While inflation anxiety is dominant among some economists, other experts believe that inflationary expectations might be overblown. These diverging views come as uncertain policy changes lie in the backdrop. The Reserve Bank of Australia has hinted at the possibility of a rate hike. However, the bank has not given a clear timeline. The supply constraints taking shape globally have also contributed to the uncertainty around inflation in the coming months. The Australian property price journey has been unmatched by any other sector within the country. Housing prices have risen at an alarming rate, perpetually reaching new highs. However, it's important to note that an interest rate hike might put downward pressure on inflation. A rise in interest rates would have a direct impact on housing prices. As lending becomes expensive, the housing sector is expected to cool off, especially as buyers develop expectations of further rate hikes. Stagflation is a combination of low economic growth as well as rising unemployment and extremely high levels of inflation. It can be assumed that stagflation may not be a realistic possibility for Australia in 2022, though a proportion of experts are speculating inflation could persist. The indications for the job market seem positive. Rising job ads have provided a better than expected outlook for 2022. Even as surging Omicron cases loom in the background, the predictions for employment remain upbeat. Data by Australia and New Zealand banks suggests that job ads rose by 7.4% in November 2021, and this momentum is expected to continue in 2022 as well. So in a nutshell, economic recovery is expected to continue into the new year, with the labour market developing resilience along the way. Additionally, a recovery in wages could further bring out a radical change in policy action. If wages growth exceeds inflation growth, then it's highly likely that contractionary policy measures would be adopted. Now, if you like the information in this video, you can like, share and comment on it. You can also subscribe to our YouTube channel and you can press the bell icon to get notifications for our latest videos. I'm Rachel for Kalkinemedia.